What is going on YouTube? It's Sankey and we are back with another one. Alright guys, so in this drop I've got a couple of players I want to bring to your attention, but before we get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. Now that wraps up another day in the markets, and as we're closing out the week, it's looking like the market is finishing off on the back foot, but we know it's volatile times right now. Now across the board today, plays were down, and when that storm hits in the markets guys, these plays are going to get wrapped up in it. But you guys got to know it's just temporary. Now I'll draw your attention to this. So the reason why there was a storm in the market today is because GDP figures for the US came out. They came in at 6.4% growth. Now it's a slight miss because targets were 6.5 to 6.8%. But you can see the overreaction in the market now. Just because it's a marginal miss, 0.1%, markets have come down, created that storm in the market. So it shouldn't phase you at all. The red you see in the market, again, I say it should be an opportunity for you guys to pick these plays up on the cheap before they resume their climb. And the next green day is just round the corner. Anyway, so in this drop, I'm coming at you with a couple of plays that will explode. And in this one, I've got a jam-packed one for you, so do make sure you stick this one all the way through with me. All right, guys, you know what time it is. Let's get ready for the first one. Now, the first one I've got for you, that's EasyJet, ticker symbol EZJ. This is our airline reopening recovery play. Let me tell you guys the narrative with this one. We know travel bans are soon to be lifted. That's going to play into their favor because bookings are going to start to be filled up. Revenues are going to start to be made. And you guys must remember, airline travel is not going anywhere. It's here to stay. So when these are lifted, there is going to be a surge in demand. So I want to put this one back on your radar. Now we also know this one's got a strong brand, number 1, number 2 in various different countries, including the UK, France, Switzerland. Now we rock with leaders over here, so this is why I like this play. Not only that, the balance sheet is in good condition. We know a lot of these reopening recovery plays had to load a pile of debt onto their balance sheet to stay afloat. Now this is a play that despite the increase in debt, that balance sheet still looks in good condition. We know a lot of other reopening recovery plays, their balance sheets are looking worse for wear, but that's not the case with this play. So there's some financial comfort with this one too. Now if we just dive into the charts guys, as I mentioned to you guys before a couple of weeks ago when I brought them to your attention, this one is in consolidation mode and they're still in consolidation mode right now. And that's a good sign of things to come. Again, I've taught you guys that technicals, the bullish movement, when you see the rising support, and you can see it on this play. And right now you can see they're almost at the very top of that consolidation pattern. So this play is just waiting, ready to make their climb upwards. And all it takes is an announcement of travel bans being lifted, good momentum with regards to a reopened economy, and this one will step up and make their climb, break through that consolidation pattern. But before they do, you guys got to get your positions ready in this play. Now if we take a zoomed out look guys, you can see that pre-pandemic levels on this one was 1,500 pence. That's a 50% increase on where they're currently trading. This is a good sign. You'll find a lot of other airline plays that are already at their pre-pandemic levels or even surpassed that, and logic will tell you guys they don't belong there. They've got no business being at their pre-pandemic levels when they haven't fully opened up their business. But this is a play that doesn't fall into that category. Now I know this play isn't the new kid on the block or the shiny new object in the market, but guys, making returns in the stock market is sometimes as easy as just keeping it old school. The next play I've got for you, that's Penn National Gaming, ticker symbol PENN. This is one of our gaming gambling plays in the portfolio with big potential ahead of them. Now I don't want you guys to be afraid of the red you've seen in this play over the last couple of days and weeks with this one. We know back in March this play was trading above $130, but just use this as good entry to get into this one. Now what I love about these kind of movements guys, these downwards movements, is it levels the playing field. So those of you who didn't get this one the first time round, you guys can hop aboard, join us on this play. As I say, big potential play we have right here. Now this one separates themselves from the competition because of that ownership stake in bar stools, and this just gives them that growing funnel of customers into their main business. Now we know right now the gaming gambling space is underappreciated by investors, not shown any love. But the beauty about these markets guys is you can only keep these plays down for so long before they have to make their climb. This applies to DraftKings also and Golden Nugget. Those two plays will climb, and there's several catalysts to look forward to with their good financials, whether that's more states coming online, and there's several that are in talks right now, or partnerships, acquisitions. Those things will push those stock prices up, move them up a tier. So I want to put this one on your radar, ready to be picked up in the markets. Now the next one I've got for you, that's Vuzix, ticker symbol VUZI. Now we're switching things up a bit with this one. Vuzix, they've got their earnings coming out on the 10th of May. And what I'm expecting is that classic pre-earnings run up, then earnings day will bring us volatility. You guys know these plays can crush earnings from top to bottom, and earnings day will still see a sell-off. Now we know this one's had a red day today, brings them closer to support around that $20 mark. So if you guys can make good entry on this one, run them up and then sell out pre-earnings, you can net that 15% return or whatever it is before then. Now I am long Vuzix, but because of the volatility profile in this one, you can win several times over in the short term with this play. And what you guys got to know is this is a richly valued play, so they've got to have a ceiling. This isn't a play that's just going to continue climbing through the year. They are going to show that volatility profile that I teach you guys. So the way to make cash on this play along the journey is to play this one in the short term. So bring them to your attention. Now the next one I've got for you is no other than Tesla. Now let me help you guys wrap your heads around that short-term volatility you guys have seen after earnings. Now we know earnings was a crush, but what the investors are doing is they're cherry picking certain things from the earnings to focus on. Things like regulatory credit, stock compensation, and guidance as well. But you can't take that away from the fact that this is a strong business, strong brand as well in a growing industry. That makes this one of the undeniable plays. So in terms of how you guys move with this play, what you want to do is, I say you want to pull that buy-in strength maneuver on this play. So wait for them to bottom out, wait for them to show some stability in that stock price, bit of a climb, first green day, first 2 green days, that's when you guys consider adding to your position on this play. As I say, I've still got my $1,000 price target at the end of the year on this play because of strong fundamentals and that rapid growth rate that they're going through. So this is the play I want to bring to your attention. So if you're rocking with the channel, you know what time it is. And this question comes from Ash, says, I've been averaging down on my high conviction plays, but sometimes I feel like I'd be better off selling my position and then buying in again at a lower price. I appreciate timing, the market is a gamble, but are there conditions under which you'd prefer to sell out rather than average down? Now this is a good question I want to highlight for you guys. So first up, you mentioned it can be problematic selling out of a position with the aim to rebuy back in. Now this is true because if you're not clued up on the technicals and know what's going on in the business, what could happen is you might end up selling here but having to buy back in here, so higher than your sell price. Now I drew out 2 questions out of this one. The first is, would I sell out of a position if it's falling? And will I sell out of a position if it's falling with the aim to rebuy back in? Right, so there's 2 different things going on I want to clear up with you guys. So in terms of would I sell out of a position when it's falling, you've got to remember when we invest into a play, we have to ensure that play sticks to our original investment thesis. They don't deviate from course. So I'm going to give you guys an example. Clear, with Marathon Patent Group, for example, we know they've got a roadmap to deploying those 100,000 miners. Now, if Marathon came out tomorrow and said, guys, we're not deploying 100,000 miners, in fact, we are stopping our mining operations where it's at right now, it's time to sell out of Marathon wherever you're at, because what's going to happen is that play is going to continue falling. They've completely deviated from the script, right? We invest into Marathon because they're going to deploy those 100,000 miners. Now, the second question was, under what condition would I sell out of a play with the aim to buy back in cheaper? So this takes me back to, I say, you've got to be clued up on both the technicals and know what's going on in the business to pull this off correctly. So the situation is this. If your average entry price is at the support price and your stop limit is set at support, and that play comes down, kicks you out of the play and continues downwards, now as long as that's a market overreaction which caused that stock price to come down and not an actual business change, like an example I just gave you of Marathon saying they're going to stop their Bitcoin mining operations, it's a market overreaction, that's an opportunity to buy back in lower because you're going to need the investor conviction and strength to push that stock price back up above resistance, which will be its old support price. Now, if those things don't align correctly, you run the risk of that play breaking support, kicking you out of the play, and then you potentially buying back into a play that never reaches back up to where you want it to be. So as I say, this isn't a strategy where you just go and use on all your plays just because they've dipped down. You've got to understand what's going on in the business as well as knowing their trading pattern. So that wraps things up. Now, if you'd like to help out the channel, do hit the like button. And if you're new, join the movement by hitting that subscribe. Also, check out link down below to the Patreon. Come and join our winning team over at the Discord. Now, as we progress the rest of the week, you guys know I'm turning up the heat to ensure you guys continue winning with me in these markets. So I'll catch you on the next one.